Zambia's banking system currently has more money available for investment than the amount of government bonds being offered. Following President Hakainde Hichilema's re-election, investors are increasingly talking positively about Zambia. Today, 21st August 2026, Citi Group expects to buy Zambia's 7-year government bond, the first major bond sale since the election. Citi has also upgraded Zambia's international bonds from market weight to overweight. In simple terms, Citi is saying it is becoming more confident about putting money into Zambia. The bond Citi wants to buy is in Kwacha. That simply means government is in a position, if it wants, to borrow the money in Kwacha and will repay the investor in Kwacha with interest according to the agreed terms. The buyers of these bonds can include Zambian banks, pension funds, insurance companies, and international investors such as Citi. Why does this matter, you may ask? Remember, earlier this year, Zambia's local currency government bonds had delivered a 36% return in United States dollar terms, making them the best performing emerging market local currency government bonds tracked by Bloomberg. Emerging markets are countries whose economies are developing and becoming increasingly important in global trade and investment, but which still carry more risks than advanced economies. Examples include South Africa, Brazil, India, Nigeria, Egypt, Indonesia, and Mexico. So Zambia's bonds performing better than those of many other emerging markets is a significant signal. Investors have been watching to see whether Zambia would maintain the economic direction established during President Hakainde Hichilema's first term. Now the election has happened. The president has secured a second term. And Citi has responded by saying it expects to buy Zambia's bonds and has upgraded its view of the country's international debt. Why is this happening now? Well, to understand this, we have to go back 5 years. President Hakainde Hichilema came into office while Zambia was dealing with a serious debt crisis. The country had defaulted on external debt in 2020 and had to negotiate with its creditors to restructure what it owed. The restructuring was difficult, but it reduced the immediate pressure on government. Then came the Eurobond buyback. In simple terms, Zambia had expensive old external debt that would continue costing the country money. Government worked with financial institutions, including Citi, to restructure and buy back part of that debt under better terms. The purpose was straightforward: reduce the burden of expensive old debt and create breathing room for the economy. This is important because Citi's renewed interest in Zambia does not mean government is simply returning to the borrowing that created the crisis. Government has been firm about debt sustainability. The objective is to manage the debt Zambia already has, protect the gains from restructuring, and create room for productive investment. So what does that have to do with electricity? Well, everything connects. If government has less pressure from expensive old debt, there is more room to put money into productive areas such as electricity. More electricity means more power for mines, factories, farms, and businesses. More reliable power allows businesses to produce more. More production means more jobs and more goods for the market. And when more Zambians are connected to the national grid, or electricity, if you like, households and small businesses can also participate more actively in the economy. This is why the debt story eventually becomes a story about ordinary people. Why are international investors interested? International investors have many choices. Citi can invest in countries such as South Africa, Brazil, Nigeria, Kenya, Egypt, or India, indeed. Zambia has to compete with all these countries for investment. So when Citi looks at Zambia, it is looking at the country's risks and the possible return it can make. It is seeing a country that has restructured its debt, improved its fiscal position, rebuilt confidence in the economy, strengthened its domestic bond market, benefited from stronger copper production and exports, and seen the Kwacha recover. They now know who will be responsible for implementing the economic program over the next 5 years. Why does Citi matter? Citi is one of the world's major banks. It works in international banking, investment, and financial markets. Its decision to move Zambia's international bonds to overweight is therefore significant because Citi is effectively telling investors that it sees Zambia's debt as becoming more attractive relative to other opportunities. Citi is not doing Zambia a favor. It is making a commercial decision because it believes the potential return is worth the risk. And Citi has already been involved in Zambia's debt story, including the restructuring and Eurobond buyback process. What has changed under President Hakainde Hichilema? The central change has been moving Zambia towards managing its debt more carefully and rebuilding the economy's foundation. The government of the Republic of Zambia has restructured the country's debt. It has completed the IMF program. It has worked to rebuild international reserves. It has pursued stronger revenue collection. It has worked to stabilize the Kwacha. It has undertaken the Eurobond buyback. It has continued reforms aimed at rebuilding investor confidence. And Zambia's mining sector, particularly copper, is generating stronger foreign exchange earnings. These things reinforce each other. More exports bring more foreign exchange. More foreign exchange supports reserves and the Kwacha. Better management of government finances reduces pressure to borrow simply to cover gaps. Lower debt pressure gives the country more room to invest, and greater confidence makes investors more willing to put in money into Zambia. What about the Bank of Zambia? There is another development worth understanding. The Bank of Zambia recently reduced the amount of Kwacha deposits that commercial banks must keep as reserves at the central bank from 26% to 21%. In simple terms, banks can now keep more of their money available for lending and investment. This is not the same thing as Citi deciding to buy government bonds. And we should not say that one caused the other, not at all. But both developments fit into the wider economic picture. After years of stabilization, inflation, the currency and the financial system, Zambia is now creating more room for money to circulate through the economy. What does this mean for ordinary Zambians? A bond auction can sound like something that only concerns bankers. It doesn't. If government can manage its debt at a lower cost, more public money can potentially go towards productive areas. If electricity investment increases, businesses can operate more reliably. If businesses expand, they employ people. If mines expand, they need Zambian suppliers and workers. That's what it means. If roads and infrastructure improve, businesses can reach markets more easily. If agriculture expands, farmers can produce and sell more. If investment increases, more opportunities can be created for young people. That is how a financial decision eventually reaches people's lives. And this is where the election comes in. Before the election, investors were waiting to see whether Zambia would continue with the economic direction established during the first term. Citi is responding positively. The first post-election bond auction is attracting attention. Citi expects to participate. The bank has upgraded Zambia's international bonds to overweight, and it expects strong demand because Zambia's financial system currently has more money available for investment than the amount of bond government is offering. This does not mean Zambia has finished fixing the economy. Not at all. It doesn't mean that. The country must protect its reserves, keep inflation under control, maintain fiscal discipline, manage debt carefully, and continue attracting investment into productive sectors. The credit rating agencies will also be watching what happens next. Citi believes Moody's could upgrade Zambia if political and economic stability continues, while it sees a possibility of S&P moving Zambia to B- in 2027. If government maintains its fiscal consolidation program, the message from the market is therefore becoming clearer. Zambia spent the first 5 years repairing a damaged economic foundation. The next 5 years are about using that stronger foundation to grow. More mining, more electricity, more agriculture, more investment, more production, more jobs, and more opportunities for Zambians to participate in the economy. Citi is now putting money behind its confidence in that direction. That is what makes today's bond auction very important.